Hi, this is Tom Aspray with the Viper Report. Identifying market risk and helping my clients avoid it, I feel is one of the services I should provide my clients in both the Viper Report as well as the Viper Premium services. In last week's action, I noticed some loss of short-term momentum by midweek, and with the weekly close, I felt that the risk on the long side had increased. As I commented to clients, buying into short-term support when some of the technical studies have just turned negative is too high a risk for me, and I cut those orders out as I wanted to see how the market developed. Stocks did close lower on Monday, but not too bad, and then on Tuesday had a very sharp rally. S&P was up 0.6%, Dow was strong, and many analysts were looking at the retail sector and how strong it was acting with moves in Tapestry and in Tiffany. In fact, one analyst, when interviewed for Macy's, was looking to buy call options. It was trading about $42 for a move to $45. Those folks were sorely disappointed. Macy's this afternoon is trading near $36 a share, down 14%. And based on my analysis, there was no way I'd be buying Macy's yesterday heading into earnings. That's worse than a coin flip. So what tools do I use and how can they help you become a better investor or trader? Let's take a look. I've been studying and analyzing the stock market for most of the past 30 years. So I feel I have a good handle on when the market is risky and when it is not. Earlier in the year, after the market's sharp drop into the February lows, we were telling clients to buy the next Monday. And throughout the spring, we felt pretty confident, or I did, that this pattern was going to be resolved by a move to the upside, and that we would overcome this downtrend and push the market averages sharply higher. I was pretty much alone in this bullish look, as many other analysts and traders felt the market was going to break to the downside, as indicated by this headline on May 3rd in MarketWatch that the outlook on the UX stocks is getting more bearish. My analysis at the time indicated the risk was favorable in establishing new longs, and positive signals were confirmed a couple of days later as that downtrend was soon broken. As you can see from the updated chart, the Spider Trust, or S&P 500, has had a good move to the upside since early May, going from around 260 up to 285. We have been bullish throughout this period and buying dips. The last week's action, the very narrow ranges, and some signs of deterioration in the market internals, that is the advanced decline analysis, suggested to me that the market was vulnerable to a pullback that could take the market below initial support in the 281.68 area, and I would look to buy lower. My positive outlook on the major trend had not changed, and I think a further correction will be a good buying opportunity for a rally into year end. As you can see from the updated chart, stocks are down sharply in Wednesday trading. Though the day is not closed, we're already down to the 280 level. And if we break below these lows, we could see even heavier selling. So stay tuned. If you're interested in either of my premium services, you can go to viperreport.com. On the homepage, you'll see a link to the Viper ETF report. If you click on this, you'll see a description of the service, and then at the bottom of the report, you'll be able to sign up through PayPal. It's just $34.95 per month, and it can be canceled online at any time. If you're more interested in individual stocks, you can go to the Viper Hot Stocks report. It'll tell you about the service. It's also released twice a week and includes 6 trading lessons, as is the Viper ETF report, to all new subscribers. It also is just $34.95 per month. I think the last part of 2018 is going to be an exciting time in the markets. I think most investors and traders will need an experienced analyst on their side to help them profit for the rest of the year. I hope you decide to join us. Thank you very much.